What is going on, YouTube Nation? This is Start Dividend. If you guys are new to my YouTube channel, make sure you subscribe and hit the notification bell so you don't miss future videos. So I have posted videos on IVR, and they just did a reverse stock split. So I'll kind of explain to you guys what they're doing. I'll try to make it very basic, and I'll show you why companies stock split versus reverse stock split. And I'm going to be long in IVR. I'm going to be honest with you. I'll show you how many shares I had and what's going on with IVR, and I'll explain why they kind of did this reverse stock split. So again, I posted a video yesterday on a monthly dividend strategy to earn dividends every month. So make sure you check out that video. But I really wanted to go over IVR, the reverse stock split, and why some of these other companies do stock split. Obviously, the big one is Amazon today, and I'll kind of explain to you why Amazon and a company like Starbucks would do a stock split. So, if you're new to this channel, make sure you subscribe and hit the notification bell so you don't miss future videos. Smash that like button. Let's check these stocks out right now. Okay, so look at IVR. I mean, a lot of us were buying the dip in those guys when it was like $1, less than $2, and they just did a reverse stock split. So you notice now it's $16.90, and it has a dividend yield apparently of 2.13%, a volume of 4.77 million. Market cap of 5.57 billion US dollars. Its year range is 157 to all of a sudden 46. Its day range was 1672 to 1769. I think that might be an error. It wasn't 46. And its previous close was 1750. So people are asking, why did they do this? Okay, why do people reverse stock split? So one thing is, to investors, okay, all of a sudden, Zacks.com is listing these guys as a buy. These guys were hit hard during the pandemic. I mean, you see the tremendous nosedive to 195, and then it was down to 172. So they have taken a beating. So it gets to the point where these big firms, investors say, is it really worth it? You see the very high yield, okay, and it appears to be a yield trap. It's above 10%. Money wise, they're not looking too hot. And I was telling you guys, this is one you got to keep a close eye on. And I'll show you what happened to my shares all of a sudden. Look at here with IVR, okay, the reverse stock split. So I had a lot of shares, like in the 400s, okay. I had really good dividends coming in. I showed you my most recent video with my dividend income and how things are looking with IVR. All of a sudden that shrunk down to 49. Now that's not a bad thing, because again, the price per share is going to be attractive to investors. And again, a mortgage-backed real estate investment trust or a real estate investment trust, 90% of what they make have to go back to us. And the most important thing is the FFO or AFFO with mortgage-backed rates or real estate investment trust. You can look at PE ratio. It's not the best indicator. FFO or AFFO were the biggest indicators. So I'll do a quick review on IVR, revenue-wise and dividend history-wise, and why people are starting to get turned off, and the board of directors had to make the call, and I'll show you. So before the pandemic, okay, this is in millions US dollars. 2015 it was 650, then 2016 was 478. 2017 was looking good, 545. 2018 643. 2019 778. 2020 280. That's a big nosedive. And then 2021 169. So the non-operating income and expense is huge. That's big in the negative right there. Pre-tax income, income after taxes. Look at all these negative numbers. So that's going to turn off people. Net income, look at that. Ouch. That's down. So there's a few things, and I'll go over the FFO as well with IVR. So right here we got some problems. So funds from operations, okay, 331, 2017, 2018, 284, 2019, 346, 2021, 174, and then 2021, 155.84. We got another problem, okay? Negative 49.53. Price per share goes down. Funds from operations growth, 10.82. And then you're starting to see these red flags. Net operating cash flow growth, negative 48.62. negative 11.95. So these guys are taking a beating. Okay. Just look at all this. I mean, just whoo. 5-year trend, the trends are really down. Then all of a sudden, cash paid, oh boy. Look at this. So cash dividends and growth, okay, that's, you can blame the pandemic a little bit, but my gosh, cash paid total, all in the negative right here. Okay, so you're seeing all these red flags. Change in current debt, ooh, 245.61 million. Okay, so you're seeing all these negative things. This is why I told you guys, be careful with this one, because this is my risk one that I took. So then you start getting to a price, a cheap price, okay? Go here, year to date. So they're already decreasing in price, which is a problem, okay? But, okay, still attractive as a dividend stock. And they're trying to make a comeback. So they get this, people are starting to load up on IVR. They're trying to make it attractive to investors, because if it goes back to where it was and it gets delisted, we're in trouble. So they want to make sure it's not delisted. And like I was telling you, I was on the phone with E-Trade and I'm like, what is going on here? Why can I not reinvest dividends? And they're like, well, look at the price, got to be a certain price range, and they're at risk of being delisted. So, that's kind of what was going on. So they had to do the reverse stock split to make it more attractive to investors. So, these guys with the mortgage-backed REIT, they do have a pretty decent track record in the past few years. The pandemic really hit them. Now, I'm going to show you two stocks that did a stock split, and I'll explain to you why these companies did a stock split. So here's the thing. Amazon just split their stock. They did a huge stock split. Stock splits are different versus reverse stock splits. Reverse stock splits, you start to get in damage control. Stock splits are, we are doing so well, we're making so much money, our price per share is going up, and then companies like Amazon do a stock split to get attractive to people like you and I who cannot throw in thousands of dollars in price per share. And hopefully Amazon eventually starts distributing a dividend. Don't quote me on that. But I'm just giving you guys kind of a way to switch it up with this channel and understanding stock splits versus reverse stock splits. So I'm going to jump to Starbucks real quick. I know I just posted a video on them yesterday, but I'm going to go over a few things with these guys and why I always discuss these guys as a excellent dividend growth stock. So like in my video yesterday, I explained why, Starbucks has a different distribution schedule with Coca-Cola and Pepsi. So check that video out. But the thing with Starbucks is they're a very unique stock. And I'll go over their stock split history with you guys and understand why people are buying Starbucks stock and they're really buying Amazon stock. And a lot of people were very turned off by IVR. So their dividend yield is 2.48%, PE ratio is 21.17, volume 12.53 million. Market cap is 90.7 billion US dollars. The tier range is 68.39 to 126.32. Day range was 78.83 to 81.30, and its previous close was 79.05. Now, I went over the dividend history yesterday, so check out that video that I have at the end of this video with my most recent stuff. This is what I like about Starbucks, and I'm going to jump to their stock split history. So here's the thing. These guys have been growing like crazy as a company. The revenue's been going well. They hike their dividends all the time. And look at these stock splits. 93, 2 for 1. 95, 2 for 1. 99, 2 for 1. 2001, 2 for 1. 2005, 2 for 1. 2015, 2 for 1. So looking at a stock like this, it increases in price per share. That's one thing. The beautiful traditional and/or Roth IRA. And again, this is not financial advice for entertainment purposes, only disclaimer in the description. But stocks like Amazon and Starbucks, the benefit of Starbucks versus Amazon is you get dividends. You earn passive income. Okay. Now, granted, excellent traditional and or Roth IRA stocks, both of them, because they increase their price per share, done very well against the S&P. They're in demand. I always tell you guys, are these companies, they're in demand, they're beautiful dividend growth stocks or traditional and or Roth IRA stocks. So they're increasing their dividends. They're splitting their stock. Okay. Now you start reinvesting the dividends and you look at the track records of companies like Starbucks, McDonald's, and all these other companies that have a history of stock splits, Church and Dwight, CHD, you're going to have stock splits because their price is going up so much that investors are like, I'm not going to touch it because it's doing so well. I mean, I don't have the money for that. Versus IVR is like, ooh, I don't like the fundamentals. I don't like the price per share going down. This is just not attractive to us, or investment firms will say, ooh, and then the board of directors are like, hey, we got to do something before, one, we get delisted. Two, nobody's going to want to touch us with a 10-foot pole. We appear to be yield traps. We appeal, we're not doing well press wise. Popular websites like Zacks and all those other things, Yahoo Finance, they're just grilling us. Okay, we got to do something. So, and then the board of directors just slaps their hand down and like, hey, reverse stock split. We got to get back to where we were, and appeal to be attractive, and woo investors and investing firms and big time investors and companies like Vanguard, BlackRock. But these guys, they're more appealing because they stock split. You get more shares versus, hey, we gotta get rid of some of our shares. So that's what I'm just saying. This is why I post videos on stocks that do stock splits. It's very attractive. They increase in price per share. They're going to increase your net asset value. Again, I'm not giving financial advice for entertainment purposes, only disclaimer in the description, but I really wanted to explain to you why stocks, dividend stocks or growth stocks that have extensive stock split histories. That's why I call them the unicorn stocks. I mean, they have everything. I mean, they're just, Starbucks increases their dividend, price per share, revenue, they're in demand, excellent day trading. People do options trading with Starbucks, and that's what makes them very unique and very special as a dividend stock. So let me know what you think of this video. If you guys are new to this YouTube channel, make sure you subscribe and hit the notification bell so you don't miss future videos. I wanted to switch it up a little bit and explain to you guys, a reverse stock split. I'm going to hold and be long in IVR. Hopefully there's a rebound, but again, I emphasized numerous times that's a risk stock, and I put some play money in there to see how things will go. So I'm kind of glad I loaded up, and I'll see what happens with those guys in the long run. But you just got to be careful. You got to do your due diligence. You got to do your research, and you got to look at the track records. And these guys are more at Starbucks is more in demand than IVR. So you guys take care. Let me know what you think of this video. What do you think of IVR? Are you guys going to continue to buy? Are you going to hold? Are you going to see what happens? How do you think it is versus NRZ? So I just want to bring that up to you guys. So I'll post a video tomorrow. I'm just really wanted to kind of, a lot of you guys are messaging me, oh, stock split, reverse stock split. What are we going to do? What am I going to do? I just gave you my take on what I plan on doing with IVR, and I just want to explain to you why some of these dividend growth stocks are better than IVR in the long run, like Starbucks, and even growth stocks like Amazon and Google. You guys take care and have a good one.